the reason I opened up the platform now, let's say it takes me another year or two before I actually launch the token. I don't want people to wait that long because gold could be $10,000 an ounce. But I think that silver could hit $100 next year. Silver has been cheap for a while, and gold made a pretty big run, and silver kind of went sideways.
Yeah, I see silver probably making over 60 this year. I mean, we've got 1 month left. We could probably get another couple bucks on it here within the next 4 weeks. Longer term, I do still think we're in the acceleration phase. So if we top out in a year and a half or two, I saw $100 silver this time. Well, what it could look like if you go from, let's say, the breakout at 2000, if you took a factor of 5, you look at $10,000 gold over the next couple of years.
Peter Schiff and David Morgan, two well-known voices in the precious metal space, highlight why the next phase of the market could be explosive. With gold already breaking major levels and the possibility of $10,000 an ounce in the coming years, the acceleration phase is underway. Silver, long undervalued, is showing signs of catching up fast. Current momentum suggests it could push past $60 this year with a strong setup for a move toward $100 as the cycle peaks. With only weeks left in the year and both metals gaining strength, investors may be witnessing the early stages of a significant multi-year breakout. If you found this gold and silver market analysis valuable, smash that like button, share it with fellow investors, and subscribe now to stay ahead with the latest precious metals updates and insights.
That makes sense. I mean, that's why, I'm doing T-Gold, and you go to tgold.com, that's going to take you to my website. We don't have the tokens yet, but you can buy the gold and we store it. And when the token is ready, you can withdraw your gold in the form of a token, or you can withdraw it physically. But the reason I opened up the platform now, let's say it takes me another year or two before I actually launch the token. I don't want people to wait that long because gold could be $10,000 an ounce by then.
Right.
So buy it now while it's 4,000. And, the whole idea would not be to spend your gold, right? Right now, you want to just accumulate. And so later on, I think it may be, more advantageous to start using it.
And
But right now, you want to just start accumulating. Yeah, I mean, silver, is almost $60 an ounce. It's about $58. And, I started buying silver for my clients at $5, $6. But I think that silver could hit $100 next year. Silver has been cheap for a while, and gold made a pretty big run, and silver kind of went sideways. At one point, you could buy 100 ounces of silver with 1 ounce. Now it's more 75 to 1. It was 80 for a while. But I think anything below 50 to 1 is you're getting, once it starts to get 50 to 1, it may pull back. Although historically, it's been much more expensive than 50. It's been 15 to 1. I think the price of gold and silver will continue to go up.
Well, first of all, I think the public thinks that the silver market is basically the retail market. So they buy silver at their local dealer or through the web, well-known notables like Miles Franklin as an example, and there's several. And that is definitely part of the silver. The real silver market is a derivatives market, like all. So it's basically a huge amount of paper contracts that go ebb and flow, up and down, with a lot of professionals that are very good at, let's say, capturing small movements and making large money because it's so leveraged. And I don't think people really understand that part of the market or how it actually operates. And then on top of that, the real silver market not only being run by derivative, but the fact that 1,000-ounce commercial bars are the true silver. In other words, that's the price that's discovered by the contracts sold on the futures exchange. It's there in London, it's in New York, and of course there's the Shanghai Gold Exchange that does something similar. There are other smaller markets. And so I think the misunderstanding can be that what drives the silver market is perhaps the retail investor buying silver. Certainly that has an effect, but the real effect is the commercial bar market. And we're in a position now that is, what's new is that demand for commercial bars exceeds the supply. Is it momentarily or is it from now on? I do not know. What I do know is momentarily, meaning the past few months, there's been a mismatch between the amount of physical silver available at the right location at the right time. And this has produced discrepancies in price discovery, meaning that there's an arbitrage opportunity. Arbitrage means it's a given commodity or stock or house or whatever that's identical or fungible, and it has a different price in a different area. And so you take the product to the new area and get a higher price for it. That's an arbitrage. And that's been happening in silver a few times here lately, which is rare to take place, especially this often. And we're seeing that reconciled, perhaps momentarily, which taken place here recently. I think the bottom line to summarize, the demand for industrial silver, the 1,000-ounce bars, is at a level that I have never seen before. And it's causing, in my view, or one of the main causes, to see a significant rise in the silver price. Yeah, I see silver probably making over 60 this year. I mean, we've got 1 month left. We could probably get another couple bucks on it here within the next 4 weeks. Longer term, I do still think we're in the acceleration phase. So if we top out in a year and a half or two, I don't. I mean, I'm on record in 2003 putting in writing that I saw $100 silver this time. And that was when silver was at $5 or a little under that. So I was looking for a 20-fold increase from the year 2003 to wherever it ends. I don't know. Price predictions are so difficult because there's so much funny money out there that might be seeking a safe haven that's really hard to anticipate or calculate. But I do think when the mainstream media puts me back on CNBC, you might be consider selling some of your silver holdings. But I would say on gold, I think 5,000's a gimme. I think it'll make it to at least that level. Could it make it to 10? Yes. Could it make it to 20? Yes.
In what time frame?
Oh, I'm still looking at, near term. I'm looking at acceleration phase. I mean, you may have heard me. I don't know how much of my podcast you've heard. I'm sure you're very busy, but I've said over and over again that 90% of the move comes in the last 10% of the time. Mm-hmm. So if that's true, and this market started in 2000, we're in 2025, what's 10% of 25 years? 2.5. And if that's 90% of the move, and that's not an exact term, but it's the idea of the acceleration. Look at how long it took to go from $2,000 gold to 40. Look at how long it took to go from $30 silver to $60 silver. Not long. If that trend continues, then I'm suggesting that it will. We could be getting to the top here very soon. Well, what it could look like if you go from, let's say, the breakout at 2,000, if you took a factor of 5, you look at $10,000 gold over the next couple of years.
Gold and silver are entering a powerful acceleration phase as physical demand surges and market dynamics tighten. Gold tokenization platforms are opening early, raising fears that waiting could mean buying at $10,000 an ounce rather than current levels. Silver, now around $58, has climbed from the $5 to $6 range and may reach $100 next year. The real driver is not retail buying, but the commercial bar market, where demand for 1,000-ounce bars now exceeds available supply. This mismatch has created arbitrage opportunities and disruptions in price discovery, signaling deep structural tightness. With industrial demand strong and paper markets stretched, analysts believe a $5,000 gold price is conservative, with potential to reach $10,000 if the final acceleration continues. Let's get into the interview.
All markets move at the margin, as you know, and the margin for silver is at the monetary. But the industrial demand has gone up very, very rapid. In the last 25 years, which sounds like a lot, but in human terms, but in monetary terms, it's nothing. So if you go back 25 years ago, 35% of the market was, and at that time, we only mined 550 million ounces on it. Today, industrial demand is probably pushing 70%, and we mine 850 million ounces. So think about that. The amount of demand 25 years ago was 30 of 50, so maybe 250 million ounces. Now, 70% of 9 is like 600 million ounces. So that doesn't go away. Now, in a big recession or a global contraction, it could mitigate it somewhat, but not that much. Now, the calling card is the monetary, and that's where the retail has backed off. I just checked again today with a couple of the big wholesalers, and they're still buying back more silver from retail than they're selling. But bigger institutions, as you outlined, Michelle, are buying silver for monetary purposes. And the industrial demand, I think, is where I've talked about for years, which means when that point in time happens, where industry and monetary demand come together at the same time, we are going to see an explosion in the silver price. And it's basically more industrial right now, I'd say, than monetary, at least from the retail side. But both demands are there and accelerate. And this is something that in a very small market like silver, you could see these extreme moves, which you've seen the last 3 or 4 days, where we go from, it hit 54 and it comes right back down to the 50-day moving average. And then all of a sudden it goes past 54, we're sitting near 60. And that's the silver. We have been in a secular market since basically year 2000 for gold and 2003 for silver. And we've gone from 252 gold to 4,400. It's backed off somewhat. But all markets move basically in 3 phases up, or 5 overall legs. There's an up phase, a down leg, an up phase, a down leg, and a final up leg. We're in the final. I just had one of my clients ask me this very question. I explained to him that in the acceleration, you will see, as the name implies, larger movements, rapid. And obviously, the market's going up doubling in a year is something you haven't seen in silver until the final phase of the earlier bull market that went from basically 1970 to 1980 in gold. And I would argue from 1966 or 65 to 1980 in silver, because silver was basically demonetized out of circulation in 1965. So the final phase is when you get the panic manic phase at the very top. We're not there yet. We need to see the public come back into this market. But when they do, it'll be unfortunate from history. It'll be more on fear than greed. It'll be fear that the dollar's value, fear that I don't have enough for retirement, fear that my pension plan won't be there, fear that my IRA is going to be taxed beyond what they originally said. I mean, there's all kinds of things I can make up. Some of them legitimate, some maybe out in the weeds. Nonetheless, the point being that fear drives a market harder than any other emotion. And I don't like to see it, but I do know the markets, and I do believe that's what we're going to see within the next couple of years. And many people say, well, the silver deficit that we've talked about will guarantee, well, they haven't used the word, suggest strongly, we have a 10-year bull market. On fundamentals, I agree with them totally. But being a student of the market since I was a 16-year-old kid, I'm well past that now, we're in the acceleration phase, and it doesn't long. We get a big movement in a short amount of time, and this is what we've already.
Silver's surge is no longer just a price move. It's the result of two powerful forces finally colliding. Industrial demand has doubled over the last 25 years, rising from a small slice of the market to nearly 70%, even as global mining output struggles to keep pace. At the same time, large institutions are quietly accumulating commercial bars, while retail investors step back, creating a rare imbalance that pushes prices into explosive swings. With the market entering its final acceleration phase, each pullback is met with even stronger momentum as supply tightens and fear quietly begins replacing hesitation. History shows that when industrial and monetary demand peak together, silver can move faster than anyone expects. If this trend continues, the coming years could redefine what high really means for precious metals. Enjoyed this update? If this analysis helped you, smash that like, share with other investors, and subscribe for the next big precious metals update.